Hi, Tim Bigham back again this week for Traders Exclusive, and going into the three-day Labor Day weekend, volume certainly low. Market showing its first down day in a while. Interestingly enough, the triple Qs, the old NASDAQ 100, been up 11 days in a row coming into today. Down a little bit as of this morning. We'll see if that streak continues. That's the second longest streak ever. So this pervasive rally off that 1900 level on the S&Ps, breaking to 2000. We had two closes above it. Looks like it's going to close below there. Interesting to see, going forward, just how high stocks will go. Obviously, it's the yin and yang between, free money versus kind of getting to be somewhat rich valuations. Certainly on a price to sales ratio, we're reaching the highest levels since the height of the NASDAQ mania back in 2001 on price to sales. Price to earnings a little bit, more amenable, if you will, but a lot of that certainly has to do with the fact that share buybacks are, reaching epic proportions here. So reducing that share count, while the actual revenues coming in haven't been moving up, but your price to earnings goes up simply because you're able to go out, borrow money at virtually zero and buy back those shares. So corporate balance sheets, you hear a lot on the surface looking good. Underneath, corporations are borrowing a lot of money to do the share repurchases. Stocks such as Apple, which don't want to repatriate their money, are actually, issuing, bonds at these low rates as well. So at some point, that will have to be dealt with. But until it does, I guess, just straight up. So some interesting notes here. Certainly we saw a stock such as Netflix, which was trading at the cheapest valuation ever. I talked about it last week, finally starting to trim back a little here. Amazon running into some troubles with implied volatilities again at, really historic lows here. So even though the VIX hasn't come down to that mid-10 level that we saw at the lows back in early July on the VIX, individual stock names are certainly getting cheap. So that's what I'm parsing through, looking for names that have had big run-ups to maybe position. Either if you're looking for a breakout of the upside, buy some cheap out of the money calls. Looking for a breakout to the downside, buy some cheap out of the money puts. But given the fact that implied volatility on some of these, high beta Momo names is at the lowest ever, Tesla being another one, does favor some basically outright option strategies. You just go buy some cheap either side. Hope you're right. If you are, you hit a big one. If you're not, the pain isn't as bad. So until next week, this is Tim Bigham. Have a very good Labor Day weekend. And as always, keep those position sizes in place. Keep those stops going. Take care.